Hi there. First of all, welcome to Minoma Analytics. This video course is meant to make you familiar with the dashboard of Minoma Analytics. It's going to teach you how to interpret the statistics that are in the dashboard. But before we start, I want to mention a couple of things that are worth mentioning. So first of all, regarding the course progression, as you will notice, just a heads up, the earlier videos have a heavier focus on theory. The reason is that there are just some concepts that the statistics rely on that need explaining first. So be aware that the earlier videos will have a little bit of a heavier focus on theory, and as the course progresses, we will start focusing more on application. But there is just certain concepts that need to be explained properly before we dive into the dashboard itself. So please be aware of that. The first video is not immediately going to dive into the dashboard. First, we're going to have some theory. Then there are levels to this, just like there are levels to trading. What I mean with that, there's like simplicity and there is more difficult. And to make it more specific, with trading, for example, we have multi-time frame analysis, where we go from high time frames to lower time frames. With this dashboard, we have multi-time frame statistical analysis, where we go from high time frame to lower time frames. And just like with multi-time frame analysis, we combine everything. So during this course, we will start simple and work our way up to integrating more advanced features or more different time frames, so to say, in different levels, different pages of the dashboard, and start combining those. So main thing, first we will have more theory and a bit of application, and as we progress, we'll have less theory and more application. And then there are some levels to this, and we will start simple and work our way up, increasing the difficulty as we go. Then a note on probabilities versus historical occurrences. So what this dashboard does is that it collects historical data. It collects historical data. So this dashboard just collects a ton of historical data and presents it to you in an aggregated fashion. Now, important to note is that in trading, and I'm not saying anything new here, in trading, we try to find patterns that have occurred in the past and assume they will happen again in the future. That is what we do with trading. We look for patterns and we assume it will happen again in the future. And the assume is important, right? That is something we assume because there is no certainties ever, even if something has been happening all the time, that will keep happening. But this is just assumption as traders. You have to make, right? You have to make this assumption. I'm not saying anything new here, but it's important to note for the following, because the dashboard quantifies historical patterns of time, price delivery. So we're going to go into, time-based statistics, and this dashboard quantifies these historical patterns by gathering them and presenting to you. And I want to emphasize that these are simple statistics. Simple as in it's not a very magic indicator or anything that's going to give you sell or buy signals. These are just simple statistics that we're going to be looking at, as we will see when we progress through the course. But the dashboard presents historical occurrences. And I want to really emphasize here that historical occurrences is not the same as probabilities. So when you see the dashboard say 0% for a certain event, then that does not mean 0% probability. So what's different? Well, historical occurrences is just saying that in your selected time frame, whatever event you're looking at has happened 0% of the time. That does not mean it will most definitely not happen. Just because something did not happen in your selected time frame does not mean it will not happen. It will definitely mean there is historically a very low statistical probability it will happen again, but it's not the same. Again, we're assuming it will happen again in the future. There's no such thing as probabilities, really, if you look at it that way in trading. With that said, this is probably the closest you're ever going to get to hard probabilities in trading, because it's just factual statistical data. So you're not going to get any closer than this, right? But it's important to understand the nuance, historical against probability, historical occurrences versus probabilities. You will often hear us talk about probabilities, and I will say it as well in the video series, but just know that what I mean is the historical occurrences. And of course, you can interpret it as probabilities. It's totally fair. That's what we're doing, but realize this nuance. Likewise, 100% in the statistics dashboard does not mean 100% probability. So it's the same theory. just that something happened 100% of the time in your selected time frame, it means that it's probably very likely it will happen again, but it's no certainty. As we know, there is no certainties in trading. So with that said, I just want to have the final point. That's a disclaimer. This video series is for educational purposes only, aimed at enhancing your understanding of the statistical data within the Minoma Analytics dashboard. It should not be considered financial advice. Trading involves significant risk and may not be suitable for all individuals. Any decisions you make based on the dashboard's information are your responsibility. Past performance does not predict future results. Minoma Analytics is not liable for any loss or damages arising from the use of this information. Always do your own research and consider seeking independent financial advice before trading. So, with that disclaimer out of the way, we can actually dive into the theory itself. So I will see you on that in the next video.